We are going to look at the chapter lease, which is covered by IFRS 16. So what all topics we need to learn from this chapter is lessee's accounting requirement for the lease, lessor's accounting requirements, remeasurement of lease liability, separation of components of lease contract, recognition exemptions for lease and sale and leaseback transactions. So all these things we will be covering in this chapter. Let's look at what is lease first. Okay, so lease is a contract or part of contract that gives right to use an underlying asset for a period of time in exchange of consideration. एकदम बेसिक लैंग्वेज में भाड़े पे लेना. Okay, so now what are the two parties? Who are the two parties? Entity that provides this right is a lessor, and entity that obtains this right is a lessee. So person who provides the asset is a lessor, and person who gets the asset to use that asset is a lessee. And lessee pays the consideration to the lessor, basically. So lease payments. So this is the lease contract. So these are the definitions, basically lessor, lessee, lease, and then who will have a right of use asset? Lessee will have a right to use the asset. So that asset will be called as right of use asset. Let's look at in more detail. Now, how we can identify whether the contract is a lease contract or not a lease contract. So the main identification of it is right to control the use of an identified asset. So we should be able to control, we should have the right to control the use of an identified asset for a period of time in exchange of consideration. Now, how we can control the asset, how we can identify whether the lessee has a control of that asset. So there are four things that we can see. Right to substantially all of the identified assets economic benefits. So whatever are the benefits from that asset for the period of lease, all those benefits should be, lessee should be getting all those benefits. Lessee has a right to get all those benefits. So be it a machinery, then whatever production happens from that machinery, lessee will that sell those products. Okay, if it is a sheep, so whatever transportation income happens from that sheep during the lease period, lessee should get that income. So all the rights of substantially all of identified assets economic benefits. So economic benefits could be monetary benefits, could be non-monetary benefits. Like if it's a building, the building itself doesn't earn any income. If it is an office, it doesn't earn any income on its own, right? But since in the office people work, do the business, and then earn the money, right? So if a building is on a lease, so whatever are the benefits of that building should lessee should get all those benefits. That is the first thing. Second thing, right to direct the identified assets use. So the lessee should be able to decide how to use that asset. So during that lease period, lessee has a control that he can use the asset as per the whatever are the lease agreement conditions. He can use that asset. So he has a control over the asset, that he can use the asset wherever he want, like a building. He can use that asset as an office, as a warehouse, whatever it is, right? So yeah, but there is so if any lease contract has some conditions, so still that is fine. Like suppose if sheep is taken on a lease, okay, and the lessor has specified a condition in the contract that the sheep cannot go in a particular country. So that is fine. That still does not take the right from the lessee to direct the use of identified asset. Lessee can use the identified asset, except that country, lessee can use it anywhere else, right? Lessee can use that ship anywhere else. So that is a scope, changes of scope in use. So right exists even if there is a restrictions on use in the contract. Or there might be a restriction like suppose if somebody takes a shop on a lease, then yeah, owner might or lessor might put a condition that shop can be used only for a specified time in a day. So that is fine. That is not a direction to use. That is a scope of use. So that is fine. Those conditions are fine. Okay. Lessor is not telling how to use the asset. Lessor is telling when to use the asset, where to use the assets. That's fine. Okay. That is the changes of scope of use. So that does not take out control from the lessee. Lessee has still control over the asset. And the last one is no ability to substitute the identified asset. So lessor should not have any ability to substitute the identified asset during the lease term. So whatever is the lease period, he should not substitute that asset. Like for example, suppose a company gets a space in an airport to put a stall or to put a shop, right? But if the airport authorities are going to tell any time to the company that, oh, you need to shift from terminal 1 to terminal 2, terminal 2 to terminal 3, then what happens? They are substituting that space. Every time they are substituting that space. So then that is not a lease contract. Because the lessee does not have a control over that space. Understood? So this is how you can identify. So these are the criteria that will help us to identify whether this is a lease contract or not. Let's go further. Now, what is a lease term? Lease term is lease period. How much is a lease period? Number of years. Okay. So what is covered by the lease term? First is non-cancelable periods. So 5 years, 10 years, as per the lease agreement, whatever is a non-cancelable period, those periods are included in the lease term. Second, periods covered by option to extend the lease, which is reasonably certain to be exercised. So there's an option in the lease agreement that the lessee can extend the lease for next 2 years. After the non-cancelable period, lessee can extend the lease for next 2 years. And if it is reasonably certain that this option will be exercised by lessee, then that needs to be included in the lease term. And third, period covered by option to terminate the lease, which is reasonably certain not to be exercised. So opposite, that lessee has option to terminate the lease, but it is reasonably certain that it will not be exercised. Like the lease contract is for 5 years, okay, and lessee after 3 years, lessee has an option to terminate the lease, but lessee is certain that he's not going to terminate the lease. Then the extra 2 years, after 3 years, extra 2 years, whatever 2 years, we'll include them in the lease term. So this is how we can calculate how many number of years is the lease period. Now there are two things. What happens if we, so as per IFRS 16, for lessee, every lease is a finance lease. Every lease is a finance lease. Okay, now let's not go into lease first. Okay, let's understand it as a finance. So suppose a person has taken a loan from a bank. Okay, what happens for that? From that person's perspective, what happens? He gets money, so he gets a cash, so he gets one asset, right? Cash he gets, that is one asset, and then he has an obligation or responsibility to pay off that loan, which is a liability. So he gets one asset and he is obliged to pay one liability. Same thing happens in a lease contract. From lessee's perspective, so we are thinking now, this is accounting treatment for lessee basically. So we are thinking from the perspective of lessee. Okay, so for lessee, he gets the asset on lease, right? So he has a right to use that asset. So right of use asset. So one asset is getting one asset, which is a right of use asset for so many years, whatever it is. Okay, and then he has a liability also, right? Because he has to pay the yearly or monthly, whatever, quarterly lease payments to the lessor. So this is a lease liability. So there is one asset, there is one liability. Now we are going to look how we can measure this lease asset and lease liability from lessee's perspective. Okay, now let's look at the lease liability first. Okay, so first, what is the initial measurement? So initially, lease liability is measured at a present value of lease payments that have not yet been paid. This is important. That have not yet been paid. That means what? On the first day of lease, if you're or before the commencement of lease, if you're paying some amount as a token money or as a deposit or as an advance lease payments, then that will not be considered under the lease liability because it is already paid, right? So it is not a liability, it is already paid. So only those payments which have not been paid, we need to take a present value of those lease payments. Now उसमें क्या क्या आता है? So lease payments include first fixed lease payments, whatever, yearly, monthly, quarterly, semi-annually, whatever. Fixed lease payments. So we need to take a present value of all those fixed lease payments. Second, variable payments that depend on an index or rate. So for example, if the payments are changing as per the inflation rate or as per the consumer price index, then we need to consider those variable payments as well in the lease payments. Third, but yeah, one more point we need to understand from the variable payments perspective, that variable payments, if they are dependent on turnover achieved or number of items, number of units sold, then those variable payments will not be included in the initial measurement. Only variable payments that depend on an index or rate will be included in the lease payments. Now, amount expected to be payable under the residual value guarantee. So what it is? So basically, lessee says to the lessor that at the end of the contract, your asset, your whatever asset it is, that the value of asset will be at least this much, 5,000, 10,000, whatever it is. So that is a guarantee of residual value at the end of the contract or the end of the useful life of the asset. That is a value that has been guaranteed by the lessee. So lessee is responsible for that value because he has guaranteed that value. So that's why we include that amount also in the lease payments. Fourth one, option to purchase asset that are reasonably certain to be exercised. So if at the end of the contract, lessee has an option to purchase that asset at whatever value, 10,000, 20,000, whatever value, and lessee is certain, it is reasonably certain that lessee will exercise that option. That lessee is thinking that, oh, at the end of the contract, I will purchase this asset. So that payment at the end of the contract will also be considered as a lease payment. And the last one is termination penalties if expected to be incurred. If there are any termination penalties and if we are expecting them to be incurred, then we need to include them in the lease payments. So these are the 5 components of lease payments, and we need to take a present value of all these components taken together. That will give us the value of lease liability, initial value of lease liability. Okay, now since we're calculating the present value, we need a discounting factor, we need a discounting rate. What discounting rate we will use to calculate the present value of these lease payments? So discount rate to calculate the present value should be rate implicit in the lease. So like rate what is implicit in the lease, or if this cannot be determined, incremental borrowing rate. So what is incremental borrowing rate? So for the same type of asset, for the same duration, for the same amount, what will be the borrowing rate for the lessee? That is the incremental borrowing rate. So either rate implicit in the lease or incremental borrowing rate. So we need to take, if rate implicit in the lease is available, we need to take that. If that is not available, then we can take incremental borrowing rate. So question में याद रखना ये, if it is both are given, we need to take rate implicit in the lease. Okay. Next, now what is subsequent measurement? What happens after the initial measurement? Okay, understood. Initial measurement हमें समझ आओ. So what happens in the subsequent measurement? So subsequent measurement, that means at the end of the year, every year at the end of the year, how things work. So carrying amount of lease liability is increased by interest charge. Liability है ना, right? तो interest तो pay करना पड़ेगा इस पे, right? So whatever is a liability that will be increased by your interest charge. Whatever yearly interest on that liability will get added in that liability. And whatever installments we are paying, like whatever lease payments we are paying, that will be deducted from that liability. Okay. So for example, if the initial liability value is say 100K, okay, or 1 lakh, and then say finance charge is 10,000 and the installment is 20,000. So what will happen? 1 lakh plus 10 minus 20. So whatever is the value, 90,000, that will be the subsequent carrying amount of that lease liability. So this is how it would work basically. Carrying amount of lease liability. Now, right of use asset. Initial measurement of right of use asset. हमने liability तो देख लिया. Okay. Now, right of use asset. Initial measurement at cost. So initial measurement of right of asset will be at cost. Now what will be included the cost? So first thing जो हमने calculate किया ना, initial measurement of lease liability, present value of those 5 components. First amount is that amount. Second amount is lease payments made at or before commencement of lease. Because जो हम लोगों ने first amount calculate किया, उसमें whatever you have paid before or at the commencement of lease was not added, right? But still that is paid for that asset only, na? So we need to add that. Okay. So amount of initial measurement of lease liability plus lease payments made at or before commencement of lease. So this we need to add to. Then initial direct cost, whatever transportation cost or installation cost, initial direct cost, whatever is the initial direct cost, we will add that to the right of use asset, and plus estimated cost of removing or dismantling the asset. So whatever is the cost of removing or dismantling the asset at the end of the contract. So we need to add that also in the right of use asset. So these 4 components will be included in the right of use assets. We'll look at the journal entries as well. Okay. Now what journal entries we will pass? Now, so this is the initial measurement at cost. So कौन से 4 component? First is the first amount which we calculated, initial measurement of lease liability, which is the present value of all those 5 components, plus whatever is payment made in advance. We can say payment made in advance at or before the commencement of lease. That is a word, but we can say payment made in advance. Initial direct costs, right? Transportation cost, installation cost, whatever initial direct cost. Yeah, but if the lessor is reimbursing part of this initial direct cost, then we'll need to deduct that as well. So it might be possible that 5,000 spent kiya, but 2,000 lessor ne reimburse kiya. So for us, the cost is only 3,000. So we'll add the 3,000 in the initial cost of the asset. Okay. Then estimated cost of removing or dismantling the asset. If there are any estimated costs of removing, dismantling the asset at the end of the contract, so we need to include that as well. So these 4 components will give us the cost, initial cost of the right of use asset. Now, how the subsequent measurements work for right of use asset? So normally subsequent measurement will be also at cost. unless another measurement model is chosen. So another measurement model. So I have given two examples at the bottom, right? One is, so if it is at cost, initial cost minus accumulated depreciation and impairment losses. So if it is at cost, subsequent measurement will be initial cost minus accumulated depreciation and impairment losses. Now depreciation कैसे calculate करेंगे? How you will calculate depreciation? So over the period, like over the lease term. So now there are two things. If the lessee has an option to purchase the asset, the ownership transfers to lessee at the end of the lease, then depreciate over the remaining useful life of the asset. Because lessee, matlab, if lessee will get a ownership of that asset at the end of the lease, that means वो asset आगे जाके पूरा उसका जो भी useful life है, only lessee is going to use that asset, right? So you should depreciate over the remaining useful life of the asset. But if that is not a case, then depreciation will be either useful life or lease term. Whatever is shorter, you will use that. Say suppose 10 years is a useful life of the asset, but the lease term is only 5 years. Then you will depreciate over 5 years because lessee does not have an option to get a ownership of that asset. So ownership at the end of the contract, ownership is not transferring. And if the life is at 10 years, but the lease term is only 5 years, then you will depreciate the right of use asset over the next 5 years. Okay, now this is when it is at cost. But what if other measurement model? So other measurement model is either investment property hai or lessee measures the investment property at a fair value. If lessee measures all his other investment properties at a fair value, then right of use asset meeting the definition of investment property. So if right of use asset is also an investment property, you need to measure it at a fair value. And second thing is जो अपना IAS 16 में आता है revaluation model. So जो भी class का ये right of use asset है, say building, okay, and if lessee is using revaluation model for revaluing the buildings at the end of every year, all the buildings is revaluing, then and right of use asset is also building, then that falls in that class, right? So right of use asset is a part of a class of PPE measured using the revaluation model. So ये भी building है और बाकी सारे भी building है, okay, and बाकी सारे building के लिए if we are using the revaluation model, we need to use the revaluation model for right of use asset as well. So this is how the subsequent measurement will work for right of use asset. Now separating components. How we can separate the components? Like some of the contracts might have lease component and non-lease component, like lease contract and service contract. दोनों भी है उसी में. So how we can separate them, or whether we need to separate them? So there is a choice given. Okay, either the entity can choose to separate them or entity don't choose to separate them. So there is a choice given to the company. So unless entity choose otherwise, we need to separate them. Okay. So if entity choose to keep it as a single lease, to show it as a single lease, then only we can show it as a single lease. But if the company does have not chosen that, then they have to separate it. Now, how you can separate the lease? So whatever is a consideration should be allocated to each component based on standalone selling price of each component. So basically ratio में बांटना है. So for example, suppose a lease contract, sorry. Lease contract, say 50,000, just an example, okay? This has two components. One is lease component and another is non-lease component. Okay, now lease component, standalone selling price of the lease component. So whatever the standalone selling price of the lease component is, say 30,000. And for non-lease also 30,000. For non-lease also 30,000. Okay. Then what we will do? We will divide this 50,000 as 25 as a lease component and 25 as a non-lease component. So what is the standalone selling price? Like if this lease component is sold separately to someone, what would be the price of that lease component? And if this non-lease component is sold separately to someone, what will be the price of that single non-lease component? So वो रेशियो में हमें उसको डिवाइड करना है. And if the entity choose to account for both components as a single lease, they can do that. But decision must be made for each class of right of use asset. Right? So एक बिल्डिंग के लिए ये और एक बिल्डिंग के लिए वो वैसे नहीं होगा. Okay? So for that entire class of assets, they need to use that same thing. But इससे क्या होगा? What will happen? If it is shown as a single lease, even the non-lease component will be included in the lease liability. So कंपनी का liability ज्यादा दिखेगा. Definitely asset भी ज्यादा दिखेगा. Right of use asset का value भी बढ़ेगा and liability का भी value बढ़ेगा. Both. Okay. Now let's look at the journal entries. What journal entries we will pass? Okay. Let's look at the journal entries first. Before we go for any question, let's look at the journal entries. So let's say from Lease's perspective, okay, whatever we are doing right now, that is from the Lease's perspective. Now, first is what? Initial measurement. Right. So initial measurement में मैंने वो example लिया था bank loan का, right? So Lease is getting two things. One is asset, right of use asset, and second is lease liability. Okay, so asset increase हो रहा है, तो we will debit the asset, right? So right of use asset debit. Right of use asset debit and liability भी increase हो रहा है, lease liability. So liability will be credited. So credit. So this is our initial measurement, right? Right of use asset debit, lease liability credit. Plus, if there is any advance payment is there, or if there is any direct cost is incurred, right? Then we will put an entry, journal entry, right of use asset debit, because वो भी हम लोग को asset के value में add करना, right? So right of use asset debit, cash credit. Because we need to include that amount, whatever is paid for either for direct cost or as an advance paid. So we need to include that in the value of asset. So we need to pass that journal as well. Right of use asset debit, cash credit. Okay, so this is an initial measurement. Now what happened at the end of the year? At the end of the year, what will happen at the end of the year? Subsequent measurement. So liability में क्या होने वाला है? Interest add होने वाला है, right? We need to add the interest in the liability, and interest is what? So loan पे जो भी interest है, what that is what? Company's expense, right? So we'll need to debit the expense. So interest charge debit, interest charge debit, lease liability credit, because liability increase होगा ना? So increase in liability will be credited. So liability, lease liability credit, and then payment of amount. So lease amount pay करेंगे. So उससे क्या होगा? The lease liability will decrease, right? So lease liability, so if liability decrease, you need to debit the liability. So liability debit, cash credit. This is happen at the end of the year in respect of lease liability. Okay. Now what about right of use asset? What about right of use asset? depreciation आएगा, right? So we need to pass a journal for depreciation. Depreciation. Depreciation expense debit. Accumulated depreciation credit. Accumulated depreciation credit. So all these journal entries will happen in the initial measurement and at the end of each year. Okay. Now, out of which, what will happen? What will go? So let's think from the point of view of profit and loss and balance sheet as well, like statement of profit or loss and statement of financial position. So for statement of profit and loss, go in statement of profit and loss. There are two things. One is the interest charge and one is depreciation. Right? So interest charge, this is the expense and depreciation is the expense. So those two things will go in statement of profit and loss from this lease, for this lease contract. Right? What will go in a statement of financial position? Balance sheet, right? So asset side mein, under non-current assets, we will have right of use asset. Under right of use asset, it will be a cost less accumulated depreciation. This is how we will show it. Showing you the extract of how it will appear in the, what all the things regarding this contract will appear in the statement of profit and loss and statement of financial position. So assets may, non-current assets may, right of use asset, cost less accumulated depreciation. Now what will happen? What will come under the liability? Liability. So there will be either, yeah, sometimes if it is the initial stage, so if the contract is for more than 12 months, definitely lease contracts will be more than 12 months. So there will be non-current liability as well as current liability. So your lease liability will be bifurcated into non-current liability and current liability. Yeah, when we'll do the question, we will come to how we will bifurcate this into current liability and non-current liability, but we will need to bifurcate the lease liability into non-current liability and current liability. So all these things will go in the financial statements, statement of financial position and statement of profit and loss. Now let's look at a question. Okay, let's solve a question. Okay, I will keep this as it is in the sheet one. Let's solve a question. Like, let's take this question. On 1st January 2001, Dynamic entered into 2 years lease for a lorry. So the contract contains an option to extend the lease term for a further year. Dynamic believes that it is reasonably certain to exercise this option. Lorry has a useful life of 10 years. Lease payments are $10,000 per year for initial term and $15,000 per year for option period. All payments are due at the end of the year. To obtain the lease, Dynamic incurs initial direct cost of $3,000. The lessor immediately reimburses $1,000 of this cost. The interest rate within the lease is not readily determinable, and Dynamics incremental rate of borrowing is 5%. Required. Calculate the initial carrying amount of lease liability and a right of use asset and provide double entries needed to record these amounts in Dynamics financial record. Now let's see. So let's always focus first on what is required. So what is required? We need to calculate initial carrying amount of lease liability and right of use asset. And then we need to provide double entries to record the transactions. Okay, Now let's look at a question again. Dynamic enter into 2 years lease for a lorry. So we know 2 years is a lease term. Contract contains an option to extend the lease term for a further year. And it is reasonably certain to exercise this. That means lease term will be how many years? 3 years, 2 years, and then plus 1 year, right? Lorries has a useful life of 10 years. But how many years we will use for depreciation? 3 years. Because nothing is mentioned in the question that at the end of the lease, the ownership transfers to the lessee. Right? Now lease payments, 10,000 per year for initial term, like for first 2 years, 10,000, and for next 1 year, 15,000. All payments are due at the end of the year. So this is also important, at the end of the year. To calculate the present value, this is very important, that the payments are due at the end of the year. To obtain the lease, Dynamic incurs direct cost of 3,000 and reimbursement of 1,000. So direct cost for us will be 2,000. For Dynamic, it will be 2,000. Interest rate within the lease is not readily determinable. That means implicit rate is not available. So in that case, what we use? Incremental rate of borrowing, that is 5%. So we will use this rate, 5% rate. Okay. Now let's solve this question. What is the initial carrying amount of lease liability? So you know what is the initial carrying amount of lease liability? We need to calculate the present value of those 5 components. Do you remember the 5 components? 1, fixed payments. 2nd, variable payments depends on the rate or index. Residual guaranteed payment. Purchase price, if there is option to purchase, then that purchase price, if it is reasonably certain to exercise that option, and termination penalties. So in this case, we only have lease payments and extended lease payments. So we only have lease payments here. Okay. So let's calculate. So initial measurement of the liability. So we need to calculate the present value, right? Present value of lease payments. So year, lease payments, discounting factor at the rate of 5%, because 5% is the incremental borrowing rate, and the present value. Okay. Now years 1, 2, 3. These payments for first 2 years, it is 10,000, 10,000, and for last year it is 15,000. Now, do you know how to calculate the discounting factor? It's always, the formula is 1 divided by 1 plus whatever is the rate of interest raised to number of years. So that means now if we calculate here 1 divided by 1 plus 0.05, because it's a 5% raised to 1. If I just copy this, so it is, I just need to change it, 1 divided by 1 plus 0.05 raised to 2. Then I need to copy this and change it to raised to 3. And then we will multiply this into this. So if I just copy this formulas, so it multiplies and gives me, so to total this, so if we calculate a total of this, that comes to 31,552, rounded off total, that comes to 31,552. So this is our initial measurement of lease liability. Now they have also asked to calculate initial carrying amount of the right of use asset. So initial carrying amount of right of use asset. initial carrying amount of right of use asset. So in that case, initial carrying amount of right of use asset, first component was what? Always what? First component is initial measurement of liability. So that is what we have already calculated, 31,552. Plus we had a direct cost. We need to add a direct cost, right? So we need to add a direct cost of 3,000. If you see here, there's a direct cost of 3,000, but it says lessor immediately reimburse 1,000 of these costs. So less reimbursement from lessor, right? So less reimbursement of 1,000. 33,552. So this will be our cost of carrying amount of right of use asset. Now they have asked us to provide the double entries needed to record a transaction. So we have already looked at the double entries, right? So we initial measurement, first entry is what always? Right of use asset debit to lease liability. And for initial direct cost or anything, we need to right of use asset and cash. So what journal entries will come now? So first journal entry will be record lease liability. So right of use asset debit and lease liability credit. So that value will be this amount. Initial measurement of lease liability 31,552. So 31,552 and 31,552. So let's say this is a debit column. And this is a credit. Okay. Next is direct cost. In right of use asset debit and cash credit. Initial cost was 3,000. So we can do this 3,000, but then we receive a reimbursement. So we will reduce that amount. So cash debit. So value of the asset will reduce, right? So we'll credit the asset, right of use asset credit 1,000. This will be the initial journal entries that we will need to record.